Imagine we're in the third quarter of 2025, and something truly surprising happens in the world's money markets. Something most people completely miss. Wealthy Chinese business leaders, the kind with billions in their pockets, quietly pull out a massive $47 billion from American stocks. And, get this, they don't put it into Chinese shares, European investments, property, loans, or even digital currencies like Bitcoin. Instead, they shift it all into real physical gold. We're talking about $47 billion worth of shiny metal bars and coins tucked away in secure storage spots in places like Hong Kong, Singapore, and Switzerland. Now, you might think, big deal. Rich folks shuffle their money around all the time, right? Maybe they're just tweaking their investments or dodging taxes. But hold on. This should really worry anyone in America with money in a 401k or stock portfolio. It's the exact same move we saw back in 2007, just before the housing bubble burst and dragged the whole economy down with it. The last time these Chinese elites dumped U.S. investments on this scale, the stock market, measured by the S&P 500, dropped a whopping 57% over the next 18 months. Big banks like Lehman Brothers went bankrupt, Bear Stearns disappeared, and everyday Americans lost about $8 trillion in savings. It all kicked off with these investors quietly selling off U.S. assets and piling into gold, just like they're doing today. Let me walk you through the proof, because this isn't just guesswork or wild theories. It's solid facts from official reports. In the third quarter of 2025, which covers July, August, and September, Chinese investors sold a net total of $47.2 billion in U.S. stocks. That's the biggest single quarter sell-off by Chinese people since records began in 1998. But here's the twist. That money didn't vanish into thin air. It went straight to one very specific place. According to the latest data from the World Gold Council, Chinese gold buying in that same quarter broke down like this. Regular people bought $28.3 billion in actual gold bars and coins. Big companies and funds snapped up $12.6 billion in gold-backed funds and investments. And wealthy family groups moved $6.3 billion into private secure vaults. Add it all up, and it's almost exactly $47.2 billion. Dollar for dollar, they traded U.S. stocks for gold. This isn't about everyday shoppers in China picking up a few gold trinkets for safety. No, this is China's richest families, the billionaire crowd, making planned, coordinated moves. For example, Pony Ma, the guy who started Tencent, cut his U.S. investments by 40% and put $2.1 billion into gold. Jack Ma, from Alibaba, sold off his last shares in companies like Amazon and Meta and shifted $890 million to gold. And Wang Jianlin from Dalian Wanda cashed out his entire U.S. portfolio and moved $1.7 billion into gold. These aren't nervous amateurs panicking in the market. These are some of the smartest investors on the planet, with access to insider info that you or I could never get. And they're sprinting away from American stocks toward gold, the oldest safe bet in history. To really get why this matters, let's rewind to just 12 months ago. In the third quarter of 2024, Chinese investors were actually buying U.S. stocks. They added a net $23 billion to their American holdings. Now, fast forward to this huge flip, from adding $23 billion to pulling out $47 billion. That's a $70 billion shift in attitude in just 1 year. And it's unheard of, because for 40 years, Chinese money has mostly flowed one way, into America. Ever since China's leader Deng Xiaoping opened up the economy in 1978, the trend has been steady investment in U.S. assets. Even during tough times, like the dot-com crash in 2000, the 2008 financial meltdown, or the COVID-19 pandemic, Chinese investors kept buying. They treated U.S. downturns as chances to get in cheap. But not anymore. The third quarter of 2025 marks the first real, lasting turn in this 40-year pattern. They're not just cutting back, they're getting out completely and heading to gold. When the smart money, the folks who've been buying for decades, suddenly changes direction and heads for the door, it's not a chance to invest. It's a major warning sign, like a fire alarm blaring. Let me take you back to 2007 to show you how this played out before. It happened just once, and the lessons are clear. The U.S. housing market was booming. Everyone believed home prices could only go up. Banks, homeowners, and investors alike. Risky home loans were bundled into supposedly safe investments and sold to retirement funds. The stock market hit a record high of 1,565 in October 2007. On the surface, everything seemed perfect. But one key group was quietly selling: Chinese investors. Data from the U.S. Treasury shows they sold a net $31 billion in U.S. stocks from the fourth quarter of 2006 through the second quarter of 2007. At the time, Mainstream financial news barely covered it. Channels like CNBC ignored it, and analysts brushed it off as routine adjustments. But look at what followed. The timeline is eerie. Selling started in late 2006 with $8.2 billion gone. It sped up in early 2007 with $12.5 billion sold. By mid-2007, it peaked at $10.8 billion. Then, in June 2007, Bear Stearns hedge funds collapsed. August brought frozen credit markets. October saw the stock market peak. By March 2008, Bear Stearns was bought out for next to nothing. September 2008 hit with Lehman Brothers bankruptcy. And by March 2009, the market bottomed out at 666, a 57% drop. From the start of the Chinese selling to the crash's low point, it took just 28 months. Less than 2.5 years. So the big question no one asked in 2007 was, how did these Chinese investors know to sell 12 to 18 months before the disaster? The answer is straightforward. They had access to info that regular Western investors didn't. Chinese billionaires tap into three main sources that give them a huge advantage. First, real-time factory data. China makes most of the stuff Americans buy. So when stores like Walmart or Amazon cut orders for holiday season goods, Chinese factory bosses know right away. 6 months before it shows in US sales numbers or economic reports. They spotted the slowdown in late 2006 and tipped off the billionaires, triggering the sell-off. Second, insider banking connections. Chinese banks dealt directly with US investment firms on those risky home loans. They saw the loans going bad as early as 2006 and knew the safety ratings were fake because they were on the other side of the deals. While US retirement funds piled in, Chinese banks quietly pulled back and warned their rich clients. Third, government intelligence. China's leaders run one of the world's best spy networks, tracking money flows, trade, satellite images of US ports, and even credit card spending. They spotted the housing bubble bursting through live data, not outdated reports. When the billionaires started selling in late 2006, they weren't guessing. They knew what was coming. Now jump to 2025. Chinese billionaires are selling $47 billion in US stocks in just one quarter. Even adjusted for inflation, that's bigger than the $31 billion they sold in 2007, which would be about $45 billion today. They're pulling out more now than before the worst crisis since the Great Depression. If history repeats, and it often does, U.S. investors might have 12 to 18 months before a big market drop. That puts us in early to mid-2026, right in line with predictions I've shared here. So, why are they doing this now? What clues are they seeing that American investors are missing? Chinese factories are right in the middle of the AI boom. They build the computers, chips, cooling systems, and power supplies. And they're noticing something alarming. Orders are slowing. Reports from the China Semiconductor Industry Association show that in the third quarter of 2025, requests for AI chips dropped 22% from the previous quarter. That's the first dip since ChatGPT launched in late 2022. Remember, these factories spot demand shifts 6 to 9 months before they hit company earnings. When companies like Nvidia, AMD, Microsoft, or Amazon cut chip orders in mid-2025, Chinese plants feel it instantly. US investors won't see it until earnings reports in early 2026. By then, it's too late. Billionaires owning these factories get live updates, like managers saying 3 big tech firms just canceled orders. That's why they're selling shares in Nvidia, Microsoft, Amazon, and Google. They know the AI growth story is cracking, but there's even more. Chinese investors have lived through debt crises before, like Japan's bubble burst in 1989, Asia's financial mess in 1997, and Europe's debt problems in 2011. Now, they're spotting similar red flags in US debt. As of 2025, the US owes $35.7 trillion, while the economy produces $27.4 trillion. That's a debt-to-economy ratio of 130%. For comparison, Japan's crisis started at 120%, and Greece collapsed at 180%. The US is at 130% and climbing fast. Chinese investors look at this and think, America's heading down the same path we've seen before. We need to get out before the dollar tanks. There's also an uncomfortable truth that US media often skips. These billionaires are bracing for the US possibly seizing their assets. Since 2022, the US has frozen $300 billion in Russian money and threatened to take it, banned apps like TikTok, and restricted Chinese tech investments. Watching this, Chinese elites think, if they can grab Russian assets overnight, they could do it to us too. So if you're a billionaire with $5 billion in US stocks and you see the US using money as a weapon, what do? You move your wealth to something untouchable. Physical gold in neutral spots like Singapore, Hong Kong, or Switzerland. On top of that, Chinese investors see the dollar losing its global edge. Since 2020, the dollar's share of world reserves has slipped from 62% to 58%, meaning trillions are leaving dollar-based assets. Where's it going? About $2.3 trillion into gold reserves, 890 billion into yuan, and 450 billion into euros. Countries like those in the BRICS group are creating alternatives to the dollar. Chinese billionaires are getting ahead of this shift, moving to gold before everyone realizes dollar power is fading. In short, Chinese billionaires are ditching US stocks because they spot four big dangers: the AI hype fading, US debt spiraling, the risk of asset grabs, and the dollar weakening. They're not selling over a bad earnings report. They're fleeing systemic threats that could wipe out dollar-based wealth. Now, why gold? It's not a random choice. Gold has three key strengths that make it the ultimate safety net. First, no middleman risk. Unlike stocks that rely on company bosses or economic systems, physical gold stands on its own. Second, it's accepted everywhere. Gold in Singapore can't be taken by the US. It's a global currency. Third, it's a shield against inflation. Every major currency crash in history has boosted gold prices. Look at past crises. During the 2008 meltdown, gold stayed steady around $920 an ounce. By 2011, it hit $1,895, an over 100% jump. In COVID times, from early 2020 at $1,580 to March at $1,620, then up to $2,075 by year's end, a 31% rise. If patterns hold, here's a possible path for gold prices. Starting at about $2,650 in late 2025, climbing to $2,800 in early 2026, $2,900 by mid-2026, and up to $3,200 or even $3,500 by late 2026, with potential for $4,000 or more by 2027 to 2028. That's why these billionaires are pouring $47 billion into gold. They're positioning ahead of the downturn. And 2025 looks even more promising for gold because central banks are buying too. In the third quarter, they purchased 337 tons, the most since 2022. China added 78 tons, India 42, Poland 34, and Singapore 28. With supply staying flat and demand soaring, prices are heading up. Money outflows like this happen in three stages. Stage 1 is the smart money phase, which we're in now through early 2026. Quiet selling of maybe $100 billion with little market shake. Stage 2 is big institutions in mid-2026 forced to sell $100 billion to $1 trillion, sparking the crash. Stage 3 is everyday people panicking in late 2026 and early 2027, dumping $2 to $3 trillion in a final sell-off. As of November 2025, we're still in Stage 1. Even legends like Warren Buffett hold $334 billion in cash, and Michael Burry has $1.1 billion in protective bets. Chinese billionaires are unloading stocks. If you act now, sell at today's prices and buy gold around $2,650. You can dodge stages 2 and 3. Wait, and you'll sell low and buy high later. So, what should you do? First, check your exposure. If over 50% of your money is in US stocks, you're too heavy there. Second, build a gold stake. Aim for 15 to 25% of your portfolio. Split like 60% physical gold, 30% gold funds, and 10% gold mining stocks. Third, cut back on pricey tech shares. Sell off things like Nvidia, Pixar, Palantir, and others. Hold on to safer ones like Microsoft or Google. Fourth, boost your cash to 20 to 30%. Fifth, watch the 2007 timeline. Late 2025 for stage 1, early 2026 for market peaks, mid-2026 for the crash start, late 2026 for panic, and 2027 to 2028 for recovery. A good mix for the next 2 to 3 years might be 30% solid stocks, 25% gold, 25% cash, 15% bonds, and 5% gold miners. Chinese billionaires are going to zero stocks. You don't have to, but you must lower your risk. To wrap this up, in the third quarter of 2025, Chinese billionaires shifted $47 billion from US stocks to gold, the biggest such move since 2007. Last time, it led to a 57% stock drop. They're doing it again because they foresee an AI slowdown, US debt issues, asset seizure fears, and dollar decline. These are the world's richest, savviest investors with factory insights and intelligence we can't access. They nailed it in 2007, and they're likely right now. History shows smart people warn us. Think Jesse Livermore in 1929, Julian Robertson in 2000, or these elites in 2007 and now. You have two paths: ignore the signs or cut stock risks, grab gold, and stash cash. You've got 3 to 6 months, not years. By mid-2026, it might be too late. Move now, and you'll rest easy while others freak out. When the crash hits, you'll be ready. When the market bottoms, you can buy quality stocks at half price. Chinese billionaires are betting $47 billion on gold for a reason. They weren't wrong before, and they're not now. The cycle repeats. Experts warn, crowds ignore, crashes follow, and the prepared win. If this helps, hit subscribe and stay tuned.